Here we have the daily price chart for SoFi Technologies Incorporated, stock ticker SOFI. Here we can see that the stock continues to trade lower. We're caught in a fairly significant amount of selling pressure, bearish momentum that can be seen, and this comes after a fairly substantial move higher. As we can see, if we go back to just the middle of 2023, we can see that there was a really significant rally in this stock, and we saw prices that reached highs above $10 per share. We were actually above 11. We were close to 12. The highs here that I'm seeing from July of 2023 come in at 1170. So less than a year ago, this would be July 31st, 2023. So less than a year ago, we were actually trading, at fairly substantial highs here relative to current prices. And this wasn't such a long time ago. I mean, we're talking less than a year. So, we've seen a lot of sideways to downward trading activity here. And we do need to start to identify potential turnaround points that can be used for new long positions if we're going to be taking a bullish stance on this stock going forward. So first, we need to kind of outline the negative factors here so that we can, better understand circumstances where these negative factors would be invalidated or removed. You need to see that type of situation occur before you can really expect a true reversal to happen in share prices. So what we can really see here is that we've got a series of lower highs, and that's a significant problem because it creates a downtrend. But for the most part, we do have it's really kind of a descending triangle pattern, more than like a downtrend channel or something like that, because we're kind of flattening out here at lower levels. One of the unfortunate points here is that we have lost a couple of our support zones, which came in previously at, we can see one here at the lows of 682, which would have been found on March 19th. So as we can see, we have traded below this level. We have broken below here. And then in addition to that, we're actually really breaking this low from, this would be November 2023, which came in at 641. So in both of these cases here, we have fallen below support levels because the low and the latest moves from here have been posting at $6.20. So we can see that we've broken a couple of important support levels here. Um, and this is due largely to the fact that we've broken through the exponential moving average cluster for this time frame. This is the daily time frame, so the exponential moving averages are more important than they would normally be. Each one of these, colorful lines here represents a different daily moving average. So this yellow line here would be the 20-day exponential moving average. Orange would be 50-day. Purple would be 100-day, and then the blue line here would be the 200-day exponential moving average. So as we can see here, we're currently trading below all of those levels. And this is significant because it sort of creates a scenario where the share price itself is likely to run into resistance at lower and lower levels. So we'll just give a quick example of that here. So like here, for example, we can see that prices ran into the 20-day moving average and then reversed lower, had some difficulty trading through here. And then we're seeing a similar type of event occurring here where the stock price is running into this yellow line, this 20-day exponential moving average, and is having some difficulty pushing through here. But what I'm trying to point out here is the fact that, this is the same yellow line, but it's occurring at lower and lower levels. So here we have, this yellow line comes in at roughly 760. Share prices run into it and have some difficulty overcoming that level. And then down here, we see a similar event with this yellow line, but the share price is at 670. So we're almost a full dollar lower here, but it's the same yellow line. So what I'm saying, really here is that when these lines are declining like this, what you're going to be encountering is a resistance zone at lower and lower levels. It's just going to make it harder for share prices to establish an uptrend. So that's kind of the current scenario that we're dealing with this stock. And then in addition to that, you do have a negative bearish indicator reading in the relative strength index. Currently, this is showing that momentum is focused in the downside direction, and this does largely confirm the price action that we're seeing in share prices. So, we really would expect this to continue until this relative strength index reading can fall into oversold territory. Once that occurs, you can start to look for potential reversal zones because um, it would suggest that share prices have fallen too far too quickly. And that occurs once the relative strength index falls below the 30 level. Currently, we're trading at roughly just below 44. We can call this maybe 43.80. So we do have a bit of a decline here that would probably need to occur in order for the share price to reach oversold territory. So ultimately, what that means here is that after losing these support zones, we're still seeing a downtrend in prices that's confirmed by the indicator reading. So overall, we do need to maintain a bearish stance here and look for potential prices lower because this is what's most likely to occur from here. So the real question is where could we possibly see a turnaround? If share prices are going to turn around, where would it happen? And it's important to remember that it should happen. I mean, prices can't just continue in one direction forever. So if the way to determine where a potential turnaround zone could occur, the method that we're using here is called Fibonacci analysis. So what we do is we take this dominant trending price move, which occurred last year, and it was a very strong price move. I mean, we did see prices rise from under 450 to close to $12, and this was just in a matter of months. So this was in a very short period of time. And if we're looking at this as the dominant price move, we can currently see that the next level of Fibonacci support would come in near this kind of teal area here, this teal line here, which marks the 78.6% Fibonacci retracement of this entire move. So these are potential turnaround points here. So if we do fall back toward, this would be the $6 mark. This comes in almost exactly at $6. So that makes it a bit easy to remember. What we're saying here is one potential turnaround zone does come in at this $6 level. And if you are bullish on the stock, or you want a dollar cost average your position at lower levels, the $6 mark is not a terrible level to watch. It's not a bad level to watch as far as betting on a potential reversal zone here. Because what we're seeing here would be a roughly a 3/4 retracement of this entire move. So that would mean that most of these rallies have already been retraced. So there's not much further for the stock to move before turnaround points can be expected. So currently we're trading at roughly 652. If we did fall another 50 cents or so, it wouldn't be the worst idea to possibly dollar cost average down your position if you are already long this stock, because this would be a potential reversal point to the top side for SoFi Technologies Incorporated, stock ticker SOFI.